Awesome. All right, super cool. I remember when I was first starting to invest, first learning about, you know, all these technical indicators and setups and all the stuff that you guys have been learning about in the members there, which is super exciting. Like, everything sort of really clicked for me when I saw examples, right? Like, you can learn formulas all day, but if you don't actually see the application of it, then like, what's the point, right? And so I think it's really cool that she includes like tons of examples. So we're gonna start out really basic, really core, really fundamental with real time prints. We're gonna see exactly how to trade the prints, which is super cool. Let's go over to the computer, let's make it happen. With this example, we're starting off with the one and the only Facebook, which is super awesome. Not like that long ago, but like long ago enough that Facebook stock was still like 175. I remember this time period I was trading them, and then there were like all the conferences, and it was super crazy time. What's cool is the mentality that she goes through with this investment and sort of the basis of this trade, which is just really powerful. So I'm excited for it. Let's jump right into it. It was a really big print on Facebook. And it happened right after earnings came out. You know, you guys know that like if a stock is trending, right? You know, you've got your chart. Like if you have earnings report, you know, an earnings report can really be a reversal point. It can go one way or it can go another way. But you know, they're like important. And if you guys have sort of started investing, which you probably should by now, and you've been through an earnings season, you'll know that like there's some significantly increased portfolio volatility in earnings season. It's just kind of how it works. And so what's important here is not just the earnings report, but actually the really big, because this print happened at the exact same time, and that's really the key. That's the foundation. That's what really is gonna have this big impact, which they say here, we'll talk about here is this idea of shorting, and shorting again really cool. If you look at like most of the market historically, the market's super slow to go up, and then it goes down really quickly in a recession. What they talk about here is this idea of taking, you know, the stairway up and then taking the elevator down as a bear, and you can make a ton of money just buying puts or just by shorting, you know, individual investment in times of big market corrections. And you know, this has worked extraordinarily well for a lot of my positions. So yeah, really cool strategy here. You can make a lot of money as stocks go down just by following what we've been learning so far about like shorting and puts and stuff like that. And then they said something that I think is really cool. They said there is fast money to be made on the short side when the market is having a correction and the stock's in a correction. Because like you gotta understand, like this is gonna move much faster than the long period it actually took to get to that point, which is really cool with Facebook, because Facebook took a long time to go up, but they go down really fast and explode on the downside, which is pretty cool. So basically what happened is they reported earnings and then they went up a whole bunch. So they did really well. They went up like 5%, which is super cool. Then she talks about, you know, she's looking little screeners, right, for all the block trades, right? So all the dark pool prints, you know, all the trades that are actually happening in secret land that no one wants to talk about. She's looking at those investments and scanning through those. And what's cool, she talks here about the VIX. I talk about the VIX, and I knew I talk about the VIX everywhere. I mean, the VIX is just the VIX. Remember again, that's the volatility index, that's the CBOE, and then you trade options on the VIX. If you guys don't know the VIX, I don't even know, man. We're pretty deep into this. It's really just a measure of the volatility of the S&P. So it just takes the time value of those options contracts and it tries to compute the actual market volatility based on that time value. And this is actually like a tradable index, right? So I've actually traded the VIX a couple of times, and it's cool because like you trade options on it and you can make some really nice returns. I've had like 40-60% returns on the VIX. They're solid. Like if you know what's going on in the market, this thing can go up 40% a day. It can go down 90% a day. It moves really quick, which is cool. And this is just based more on like the overarching market, so it's a little bit tougher to time. You have to kind of know what you're doing. But mostly when you're trading, if you're trading the VIX, this is mostly based off like news or just like, you know, big stuff like that. It's mostly news. Elections are a really great time to trade the VIX because it really spikes up that volatility. So if you can have more volatility, you're gonna make a lot more money with options. And it's got some pretty predictable patterns. So if you look at like in the past when there were crashes, you know, in 08, like this is 08, and this is like, you know, today, you know, you've got really big spikes all over the place. This is like 12, and then you kind of look at 01. I mean, 01 was huge, and so you have these huge spikes in the VIX that are actually like kind of really simple to trade if you look at the pattern. So just a cool little side note there, because she talks about it here when she was looking at the VIX and she was looking at Facebook. Just trying to figure out what's actually gonna happen here. This dark pool print was at $174.60. And it was about 3.6 million shares. And on a $100 stock, $150, $170 stock, I mean, you're looking at, it has a pretty, it's like a couple of $100 million, you know? So if someone's trading a couple $100 million, you better bet that they want to make sure they're getting a solid price for their investment, whether it be selling or buying. The $630 million, pretty freaking big. You know, it's like she says it's that Mark Zuckerberg selling, which is pretty funny. So, you know, a lot of people will see that, and then what you want to do, right, is you want to actually look at what happens to the stock. And the idea with this trade at about 34.60, this is a pretty big stock, right? So there's some room to move here. But the key price targets that you know she kind of focuses on here is 175 and 174. And we're gonna look and we're gonna get really deep into how you actually find these price targets really soon. But the idea is if the stock goes over 175, then it was smart money buying and you should buy. And if the stock goes under 174, was smart money selling and you should sell. Pretty foundational, pretty basic. But all you really want to do is you want to do this, right? And you want to see, is it going to go up or is it going to go down? And then however it goes, sort of like a symmetrical wedge, you're going to see it continue to go in that direction, right? And so that's sort of the goal, that's the foundation, and that's the key concept here, is to have that happen over and over and over again. And then you just follow whatever they do, right? So if the price goes down, you can assume that they just sold, now you should sell. If the price goes up, you can assume that they just bought, now you should buy. And you want it to sort of close above that price. You definitely want to make sure that it actually closes above this price. You want to make sure that it closes below this price if it's going down. We've seen this idea with VWAP, and we've seen it with moving averages a whole lot as you guys have gone through technical analysis. You definitely want to make sure that the candle, be it a daily candle, usually it's a daily candle, maybe it's a weekly candle, mostly daily candles. You want to make sure the daily candle actually closes above this price or below this price, right? Whatever the price is, whatever the target is that you create, you want to see the candle close. You can be aggressive, you know, you can definitely be aggressive, and if it doesn't close, maybe it hits a high above that and then it closes below. You can definitely, it just depends on the trade, depends on your feeling, depends on the momentum, but usually you want to see it actually close above or below whatever the price is. Yeah, and again, we'll kind of look more at like figuring out these price targets soon. The way she puts it here is she says, you know, you want to think about throwing a big rock into a lake. Like it's going to create a big splash if you throw a giant rock into a lake. And so you want to kind of give it some room to work itself out. And so, you know, you kind of want to give it some space. So 50 cents here is pretty solid. We'll look more at these over time, not a big deal. You got a really big order, a really big print on this stock. So that usually is a preface to a really big move. You can kind of see like the stock is already up a whole bunch. So the question is, what is gonna go on here? And so here's what that looks like on the actual chart, which is super cool. You kind of see, like here's the July 27th candle. You see they reported earnings, they went up a whole bunch. And the people that own this, like whoever they were, they sold like at 174, like 174.5, right? So they're selling way up here at the top. And then, you know, you kind of see it just kept going down and down and down. And the candle actually closed this day. You can kind of see in the top left, you can see the day. The day actually closed at 170. So it closed below 174, right? So that's when you would sort of go in here and you would short. And in the short term, you can tell it worked out pretty well. It kept going down sort of a little bit over the 100 moving here, the 100 simple moving average. And then at least in the short term, it actually kept going down for a good bit. This is sort of when you had, you know, this Facebook testimonial trials and all that stuff later on. So it definitely shows like somebody probably had a lot of profit on this giant move right here, and so they were basically taking all this profit and predicting that, hey, you know, in the short term, this is a couple of months, and then this is about a year. You know, in the next year, they just went sideways, and then eventually they actually went down. So definitely a solid time to sell, considering that they probably had a massive gain from buying the stock at like 60, 70, 80 bucks and holding up to like 175. And you can see, you know, over time, there's definitely like longer term growth, but they timed it really well. I mean, the market didn't come up and beat this level for, another half a year almost, or 4 months. So definitely a solid example here where you have big guys selling out on top. Now again, Facebook, bigger stock. Since it's a bigger stock, you're obviously gonna have sort of different time frames, different periods. But for this, right, like the core foundational key focus is really simple. All you want to do is make the most money that you can right now. And for these guys, that's exactly what they did. And you don't want to be holding through this downturn. Even if it's going to keep going up, you can get back in, right? There are going to be trades like this all the time. But these guys, I mean, they crush it on the trade, which is pretty sweet. So definitely a cool little place. Actually, a cool way to use this as a tool, right? So most of the time, earnings reports, earnings are like 50-50, right? So you don't really know if it's gonna go up, you don't really know if it's gonna go down. But after the report, you wanna sort of, like a lot of times you'll have the stock that'll report earnings like NVIDIA, and it reports earnings, and then it just explodes, and then it continues to go up and up and up and up. But you can see here with Facebook, they sort of had the same pattern, right? They reported earnings, they exploded, but then they had this really big dark pool sell. And so then it just kind of tapered off. So that's a really great way to see if you're gonna actually have continued growth. Is by understanding, okay, well, how are people reacting? If somebody sells $630 million of the stock and then it closes way below what they sold it at, then it's probably going to go down for a little bit. Versus if someone bought it and it closed above what, it closed like 170, 177, 178, it closed above it, then it would probably go up a whole bunch. So a really great way here to understand maybe you should take a little bit of profits off the table after an earnings report is by seeing, is there any really big players selling, hundreds of millions of dollars worth of the stock? And if they are, then, you should get in on it, right? Little final last note here, and then we'll be sort of done with this little introduction here, which is super cool. There actually kind of another print on this later on. The original trade was at 11:32 in the morning, and it got canceled and replaced by a different trade at 11:45. And the only difference, same share size and everything, but it actually moved this price to 174.2833. So you can kind of see there, you have a little bit of slippage off of this 174.60 price, a little bit of slippage in the fill, and so they had to update the reporting. Sometimes you'll see that happen where like a trade will get reported twice because the first one was inaccurate. And with that, it shows a lot of volatility. It also shows that they probably, if it goes down, then it's probably they were selling, and if it goes up, it was probably they were buying, because usually, people won't pay as high of a price that they're trying to sell it at, and so they have to sort of lower their price a little bit to get that new one, or people won't sell it to them at as low a price they're trying to buy it at, and so they have to kind of raise their price a little bit to get that higher price. So that's really the goal here, is to interpret whether or not somebody's buying, whether or not they're selling, and then sort of as soon as you have that down, it's pretty basic fundamental stuff after that. All you really want to do is look at it, figure out if the price is closing below that trade or above that trade, and then subsequently you're going to sort of take trade Facebook. Again, kind of a bigger stock, so not as huge of a move in Facebook, just because they are kind of huge. Their market cap's massive, their float's massive. They're not going to move as quickly as some of the more active investments that we'll make. They're kind of more aligned with 90 noon stocks, but not like specifically 90 noon stocks. These are mostly where we're going to use this mostly for is for swing trades, and then you can do it with just normal stock, or preferably kind of with options, which is what we'll get into soon. But really the goal here is like reputable companies, but also companies that have sort of that flexibility to move. And if you can kind of find a good balance between those two, you can make 10, 20, 30 times what you can make in this trade in Facebook, just by having a solid trade on those, which is super cool because they'll move much more. And it's all based on the same strategy. So that's sort of the foundation. That's the basis of seeing these real-time prints actually come out, seeing these $630 million trades come out, and how they can actually have an impact on the stock, which is pretty cool. So that's foundation, and that's sort of our first example here. Hope you guys get a ton of value out of this module. Go out there, apply it, absolutely crush it, and I will see you in the next module. Thank you. Bye.